I'm excited to introduce our keynote speaker who's opening up the conference this morning. Michael Shaulov is the CEO of Fireblocks. If you're not familiar, Fireblocks works with over 300 stablecoin issuers and providers globally to help them provide best-in-class products. Last year alone, they facilitated over $1.6 trillion of stablecoin transactions and are currently on pace to facilitate over $2 trillion this year. Please help me in welcoming Michael Shaulov. Thank you.
Good morning, everyone. Nick, thanks for the kind introduction. Thanks, everyone, for coming here at fairly early on this rainy New York morning. So my name is Michael Shaulov, and I'm super excited to kick off this conference with the first keynote. And before we basically dive into the first topic, which is basically the anatomy and everything we've learned from facilitating and helping to process and transact $1.5 trillion worth of stablecoins in 2024, I want to tell you a story of basically how do we got there. So back in 2019, when Fireblocks basically was coming out of stealth mode, I met one of my former colleagues from my past life, and this gentleman was basically, he just stepped down at that point in time from being the COO and the Chief Risk Officer of PayPal to join the stablecoin project of Facebook. And I asked him, why the heck he's basically doing this transition, because he was the most senior person that I knew that was working in one of the best and most famous fintechs in the world, one of the most famous tech companies in the world, and he was basically taking this transition to be the CEO of the Facebook initiative. And he told me the story. He told look, I've been in the financial space, in the fintech space for quite a few years, and if you're working in PayPal, you're kind of at the epicenter of what's going on with money. And the weird thing is that if you are opening your web browser and you going on you're surfing into a website in Japan, that website will load at the speed of a second, you will pay nothing, and it just works. But if you would try to send money to Japan, it will take you 3 days, it will cost you tens of dollars, maybe hundreds of dollars, and actually in both cases, we're just moving a few bits from here to there, right? So this technology, stablecoins, is going to change everything that we know about the financial system. And I think, the really interesting thing for us, that's basically was my experience in 2019. It became kind of our internal lighthouse in terms of the direction that we were guiding Fireblocks through the last 6 years. And it's not surprising that we find ourselves in 2024, 2025 in this interesting position that a lot of the stablecoin traffic, a lot of the stablecoin transactions, especially on the institutional side, are going through Fireblocks. And what I want to spend the next 30 minutes or so is just to review with you what we're seeing today, how do we got here, what do we learn from all of that, and what actually makes people successful in adopting stablecoins. So, for those who are unfamiliar with Fireblocks, we are the leading infrastructure provider in the digital asset space. We service over 2,000, I think at this point 2,300 organizations that are leveraging us for anything from wallet, custody, orchestration, money movement, and issuance through the infrastructure. Inception to date, over $10 trillion that were passed through the platform. We support over 100 blockchains. Everything is what we do is about security, compliance, trust, scale. And maybe the most important thing is that we've been with our clients in all the good days, but also in the bad days. And I'll talk a bit more about that later on. So we're really privileged to work with all the leading institutions and players that are actually building for stablecoins, building this market and innovating, from the leading payment service providers that are operating in this space, like MoonPay and Bridge and Visa and Stripe and Zero Hash, Conduit and so on, that all sponsored and representing here at the event. A lot of the banks, like Bank of New York Mellon, that as some of you might know, they are actually been fairly early helping Circle to navigate their reserve, BTG Pactual, ANZ, and so on. And a lot of the fintechs and neobanks that I personally believe that they are the most important players to help us bring this technology to the masses, the market makers, the exchanges, the asset managers that are all involved. I would say everyone are actually like doing incredible job in terms of bringing the facilities and the technology that we need to operate this evolving market. And indirectly, we basically touch over 1 billion of consumers. So the next question is like, what exactly we are seeing right now in terms of the state of the market, what's picking up, what are the interesting use cases. And just to give you some idea, this is the chart of the volume of transactions, just general crypto transactions that have been going through our infrastructure since we went live in 2019, the quarterly volume. And in the last couple of years, over 50% of all the transactions that were processed through Fireblocks were stablecoins. Basically, when we started, it was about 20%, 30%, and it sort of started to increase around 2021. Now, at this point, about between 10 to 15% of all the stablecoins transactions, USDT, USDC, are going through Fireblocks. So we have a lot of insights on what people are doing. But I think it's also important to understand, what was the evolution, and I think, the short history of how we got here. So in December, beginning of December last year, 2024, we hosted our annual conference, Spark, in Barcelona. And one of the most fascinating fireside chat that I ever had was with Paulo, that was kind enough to do a fireside chat for us in the conference. And I had the opportunity to ask him a lot of questions. But as always, the first question that you ask in a fireside chat is, how'd you get to do what you're doing? And as you know, Tether basically kind of invented this space, launched in 2014. And the first use case for stablecoins was really to transfer value between various crypto exchanges, USD value for professional traders and individual traders. And that was basically the first use case. They were actually running it on a proprietary blockchain that was called Omni. It was a fork of Bitcoin. I think it's decommissioned at this point because it didn't have Ethereum at that point in time. And in 2018, I think we had the second important milestone that the US issuers came to the marketplace, right? USDC by Circle and Coinbase, and Paxdi for Paxos. And specifically for USDC, it played quite well because in 2021, we've seen this huge rise in the adoption of stablecoins, especially as they were the on-ramp and the main asset to be leveraged through the DeFi summer. And at that point in time, interest rates on dollars were very close to zero. People were basically seeking yield in a reasonably safe way. And USDC or USDT were the assets that they were using to basically on-ramp into protocols like Aave and Compound to generate excessive yield of 4 or 5%. And that was maybe one of the most popular activities which basically gain or increase the market cap of stablecoins and DeFi assets in general. Interestingly enough, that was also the point in time that we started to see real institutional adoption and a lot of interest from TradFi. So in 2021, we started to see interest from banks, payment companies that were looking at it and saying, wow, this is super interesting. We see that this is being kind of proved in production, in real use cases. How can we leverage that? And a year later, in 2022, we started to see some of the early POCs by companies like WorldPay and Visa that we were proud to support, indirectly also Stripe, basically running proof of concepts and pilots in adopting stablecoins. Now, as we all know, November 2022, FTX happens. Crypto and stablecoins becomes a very contingent word, for a lot of the traditional institutions. And a lot of those projects, a lot of the interest, at least from the traditional players, basically, went kind of a bit dormant. And while that actually happened and a lot of the volumes in terms of trading went down, what we were seeing through our platform is that stablecoin volume for real-world utility, basically moving money over the internet, continued to rise. It was really sort of grassroots phenomenon that really led us to this amazing point in 2024 that the total volume of stablecoins on-chain exceeded the entire volume of Visa and MasterCard combined. And that's actually like a pretty significant milestone. So what are we seeing right now? I would say, like, besides trading, and I'll kind of walk you through the data in terms of kind of how much we see from trading and how much we see from real-world utility. There are three main use cases that really picked up, that are really active right now in the market. The first one is really payouts and on-ramps, right? So companies like MoonPay, WorldPay, Bridge, Nuvei, that we, and a lot of others that that are probably here that we support, our partners. What they're doing is they are using stablecoins for disbursement of funds globally across a variety of use cases. So basically delivering money to freelancers, contractors, marketplace sellers, vendors, and that's something that really getting mainstream adoption. The second is basically B2B payments. Companies like Conduit are supporting traditional businesses to be able to transfer money across cross-border, what we call the stablecoin sandwich. And last but not least, but also quite important, and I think it basically underpins a lot of this activity from liquidity standpoint, is that there are hundreds of millions of people worldwide in fragile economies and volatile economies that they use stablecoins, predominantly USDT, as a hedge against inflation, right? So those are basically bank accounts for the unbanked or bank accounts for people that cannot get access to US dollar accounts, and they're protecting themselves against inflation by holding stablecoins. And there are amazing companies like Dollar App in LATAM and CipherCash in Africa that are distributing this technology and distributing this use case to hundreds of millions of people. So just to kind of give you an idea what we are seeing in terms of the data through our platform, and I think because of the vast majority of both the traders and the people that are working towards payments with stablecoin are leveraging us, we're seeing steady increase in transactions that are purely designated as payments and stablecoins. The interesting thing is that it already reached about $19 billion per month, or close to $60 billion per quarter. And this is the fastest growing use case that we see from a volume standpoint. So in the last 6 months, it was growing 12% month over month. Just to kind of indicate what we're going to see, what we're seeing from what's coming ahead, we issued a survey. It's actually the second survey that we're doing on this topic. The previous survey was in 2023, so we also have kind of a reference of what were the answers in 2023 and what we're seeing in 2024, and that gives us a good idea of what's coming ahead, right? So the survey is pretty telling. About 90%, so we surveyed about 300 institutions. It's a combination of banks and payment service providers. 90% of the respondents, they are either in production or in a pilot, or they already have a strategy of what they're going to do, how they're going to leverage stablecoins in their business. So if you're not in that 90%, I think you are a bit late. Maybe the most important thing, but not really surprising, 50% decrease in regulatory concerns. That was, I would say, the #1 reason why people were not doing that. Interestingly enough, most of the respondents see stablecoins as a way to increase their revenue, right? So it's not actually, they're not coming into this space from defending their business. They're coming to this space from an offense, right? How they can increase their revenue. They have partnerships in place where they basically figure out the infrastructure that they're going to use. And speed is the top benefit, right, that they're seeing. So, for all of those folks that are basically coming to the space, it's really interesting to review what are the challenges, right? What are the near-term challenges that they need to solve for, and what are the solutions that we've seen being deployed successfully. So the first thing is really regulatory, right? The regulatory tailwinds that we see worldwide, but specifically in the United States, that is the most important, are maybe the most important change that happened in the last, since the inception of the space, but predominantly since the recent elections. And clearly, we have the Genius Act going through the motion. maybe most importantly, actually, is not even the legislative clarity that is happening, is actually the fact that, that on the federal agency level, the OCC, the FDIC, the Fed, we're seeing really positive signs, basically permissiveness, regulatory permissiveness, that allows actors to come into the space directly by themselves, using stablecoins. But maybe as important is the fact that Checkpoint 2.0 was rolled back, right? So banks and other important players are allowing fintechs to basically using their rails to facilitate on-ramps and off-ramps. That basically propagates worldwide. So in the European Union, we have MiCA. That's a pretty established framework. 60 new stablecoin issuers are coming to issue European-backed euro-backed stablecoins. UK is moving ahead. Hong Kong, I think this month they're going to pass legislation. Japan already has legislation, right? So this is all basically coming together. Not surprisingly, basically all the concerns around compliance, all the concerns around regulatory, all the concerns around expertise are going down, and the barrier to enter and the barrier to participate is becoming lower and lower. The second thing that we see people being challenged with is really around liquidity of stablecoins and on and off ramp, right? So there is a significant regional disparity. I mean, what you will experience in Australia is different than what you will experience in LATAM, is different than what you experience in Africa. And, it also varies between USDT, USDC, other stablecoins in terms of what you need to on-ramp or off-ramp or provide, right? And interestingly enough, this is a continuous challenge, both in terms of the various rates, right? But also the depth that you can get. And there is no, at least from what we've seen, there is no silver bullet, there is no one solution. And honestly, if you want to execute well in the space, you really need to basically build your stack and choose your partners based on the use case that you're going to execute on. I know there's some discussion around vertically integrated solutions that are providing you coverage, but actually what we've seen over and over again in the crypto space, and I think this is what we've seen being deployed successfully over the 6-7 years that we're playing, is actually that people remove intermediaries to get efficiency, get to the source of the liquidity, and get to the source of the on and off ramp, and that's what allows them to execute well and build their services, right? So the Fireblocks network, that we have over 2,000 organizations that are participating in that network. We have basically all the players that are able to help you and assist you with solving this challenge, with with both CeFi players like ZeroCap in Australia, players in LATAM like Bitso and Nonco, Yellow Card in Africa being a big partner of ours, and then specialized solutions like Bridge, B2C2, Zodia Markets, and also DeFi like Uniswap that are all integrated into the platform. Now, I mentioned at the beginning of the talk that, of course, we are always excited to be with our clients on the good days, but unfortunately, there are also bad days, right? And in 2024, $2.1 billion were stolen in crypto, right? And as you're probably also aware, 2025 also didn't start that well from that aspect. Now, that's crypto, but we are in the intersection with payments. And in 2024, there was over $1 trillion of payment fraud and scam globally. So, assuming we are in the kind of overlap of those two industries, no matter how do you divide those numbers, square rooting the number, multiply those numbers, you're not going to have a good number as a result of what we are basically seeing over here. And just to give you an idea of what's going on February 2021 this year, around 11:30 a.m., I was on a call with one of the CEOs of the major exchanges that they lost $1.5 billion. And I was one of the first people that he called to kind of try to help him figure out what are the next steps, because it was very unclear how it happened. We were able to help him to put him in touch with the right incident response team that was looking into it. But honestly, I had some reasonable intuition of what's going on, how they got compromised, because we've seen this happening before. Unfortunately, in that specific case, after the investigation was finalized, I was a bit wrong. But I'll get to that in a second. So what we're really seeing, with stablecoins as basically the intersection of stablecoins and nefarious actors that are stealing money and crypto in this space, is that it's a perfect storm for the attackers. Why? First thing is that stablecoin transactions, they have very little recourse, right? They have better recourse than Bitcoin and Ethereum, because Bitcoin and Ethereum have no recourse. And in generally speaking, you can call Circle or you can call Tether to freeze a stablecoin transaction. But you need to be very fast, because what we've seen across the last couple of attacks is that hackers have an infrastructure to move those stablecoins very quickly and within minutes to basically mix them into a different asset, right? So the recourse is rarely possible. In addition, we see a lot of new players coming to the space, and while they might think that the security properties of moving stablecoins are the same security properties as moving money in the traditional space, they're actually quite different, and you need to know and you need to have the expertise, or at least partner with people that understand the nuances. In addition, we are dealing with nation-state actors, and that's like one of the only industries that as a commercial entity, you need to deal with nation-state actors like Lazarus. By the way, Lazarus didn't start with attacking crypto. They actually started with attacking the financial system long time ago. The famous hack on the SWIFT system back in 2016 and 17 was done by the same actor, and then they basically pivoted into crypto and stablecoin. We are dealing with much more sophisticated attacks because of AI, and just generally speaking, the attack surface is becoming more and more complex. So what do we do about it? I think Fireblocks is one of the only companies that invested consistently over the last 7 years in really building an evolving stack against those threats, right? So we have an architecture that is really relying on zero trust. We have the most advanced wallet technology to protect those assets when they are, when they are sitting and when they are in motion. We develop a whole technology which is called the secure transfer environment that underpins the Fireblocks network to safely and securely interact with counterparties, with on and off ramps, and with other liquidity providers. We continue to integrate with partners like chain analysis, Elliptic, and Blockade, various capabilities from transaction simulation, threat detection around transactions, fraud detection, and this is all basically being governed through our policy engine that is using the most robust and probably the most comprehensive capability to put the policies, workflows, and procedures to protect you from both external threats and internal threats. And over the years, we probably achieved the largest set of different certifications that are helping you to both assure that you're compliant and prove to your regulators that you're compliant. Now, that all basically boils down to a framework that we always work with our customers of what is the stack that they need to deploy from security and compliance. But to go back to the point that I was making, that I was actually wrong about what was going in that hack. After the conclusion of the incident response team that investigated that huge hack of the $1.5 billion theft, what we realized that there was a change in what Lazarus was doing. Before that, they were basically going after the fintechs. But at that point in time, they decided to basically breach the service provider, the wallet infrastructure of that exchange, which was safe, Gnosis Safe, for those who are familiar with that. And that was the first time that actually that group went after the infrastructure behind the exchange. Now, that to say that that this means that you really need to focus on partnering with the most competent players that are able to provide you the security. And doing this for over 20 years of cybersecurity, I can tell you that there is no silver bullet, right? Basically, it is continuous investment and a continuous cat and mouse game in terms of how do we respond, how do we investigate, how do we figuring out, how do we identifying new vulnerabilities, both within our platform and in other platforms. How do we fix them? And how do we move security forward against this evolving threat? And just to give you an idea, I think that any provider, I run this calculation every year in terms of our internal budgeting process. If you're spending less than $10 million as a wallet infrastructure, as a technology provider in this space, if you're spending less than $10 million on your cybersecurity, you're basically playing cards that are against you, right? Something bad will happen. Just to give you an idea, we are spending 3 to 4x of that amount, right? So making sure that you're partnering with the right people that have the expertise to secure your operations at scale and compliance is extremely important. Now, zooming back, one of the things that we were doing at Fireblocks is really providing the most comprehensive platform for stablecoin payments, stablecoin issuers, right? And that is first and foremost underpinned by the Fireblocks network that allows the access to different liquidity, conversions, all the integration of compliance tools, all the orchestration to make sure that your teams are able to move at the pace, at the speed, with the low cost that you need to operationalize and scale your business, and also provide you all the various capabilities that you need for wallets and custody, both for your internal treasury and for your clients, for your end clients. So with that, I would like to thank you all for listening to our presentation. I hope it was insightful. If it wasn't insightful enough, you are more than welcome to scan the QR code. This actually goes to our report that has a lot of interesting facts and comparison that we had over the last year. And and maybe just to finish again, with a personal story. Those days when I meet with other founders and other people that are operating in the space, they sometimes ask me, hey, so now that everything is evolving, what's your strategy? What are the new things that you're working on? And my answer is actually we are not. We are basically just focusing on the same strategy, on the same things that we were doing for the last 6 years, because this is the most exciting time for us, and we think for the industry, of just rapidly growing this pie, rapidly evolving the use cases, right? And rapidly making sure, at least for us, that we are able to support it with the infrastructure and the investments that we were making for the last 6-7 years, to make sure that our partners, our customers, the people that are building and operating on top of our infrastructure are able to scale in a secure, in a compliant, in a regulated way. And our job is really to be always one step ahead, to continue to innovate, to continue to support them with what's coming next, so you'll be able to innovate, push the envelope, and increase your business. With that, I'll wrap it over here. We have our booth and presence, so you're more than welcome to contact us throughout the show. Thank you so much.